Okay, right guys, here's a new market wrap for week ending 12th of June. So what happened this week in the markets, we'll head straight into it. So the key themes were FOMC, we had GDP in Eurozone and UK, and also with the market sell-off starting from Thursday, is there a second wave coming in the coronavirus pandemic? So let's kick off quickly. So GDP data in the EU slightly beat to the upside. However, it was the sharpest decline observed since 1995. Okay, so we saw GDP decrease by 3.8% in the euro area and by 3.5% in the EU during the first quarter of 2020. Now, this contraction in the Eurozone economy came on the back of frozen businesses and household activity in the last 2 weeks of March, which obviously is due to the COVID-19 pandemic. What we see is from the national statistics that France's economy shrank 5.8% over the previous quarter, while Spain's economy contracted 5.2%. Italy was it tumbled at 4.7% quarter-on-quarter terms. What about UK? It's interesting. Before GDP data came out on UK, OECD, they said that UK growth could fall by 14% if there was a second virus outbreak later this year. But then we get abysmal data coming out on Friday, where UK GDP fell by 20.4% in April. But that was obviously due to the lockdown for the whole month in April. But not just that, we've seen activity fall very sharply over the main sectors, industrial production, construction and services. However, with all the four largest economies data released, we can see further deteriorating data for Q2. Now, what's going to be on tap next week is the MPC, what the BOE expects to do in the UK economy. Are they going to be delivering aggressive policy in response, or we're looking at more stimulus or negative rates? We'll see next week, and we'll go over that. Okay, FOMC. Let's talk about the main takeaways of FOMC. Okay, they're looking to buy bonds at least at the current pace that they're doing right now. They see rates at 0 through 2022. No negative rate dots. Expects 9.3 unemployment rate at the end of 2020 and 6.5 at the end of 2021. But also see GDP falling at minus 6.5% 2020 and rising 5% in 2021. Now, what traders were looking for was the yield curve control, looking if the US policymakers would look to go into negative rates. I don't think that's a conversation they're having right now. However, Donald Trump wants negative rates, and also they want to keep the rates low as possible in order to maintain the massive deficit spending that is happening right now anyway. So the Fed did make it clear that zero interest rates are here to stay for at least another year and a half, 18 months. So according to the updated dot plot of interest rate projections in June, the policymakers do not see a rate hike before the end of 2022. So they also feel that continued treasury purchases and mortgage-backed securities, at least in the current place, is necessary, and also leaves door open to further bond purchases. What does that entail? I mean, obviously, the prospect of cheap and easy money for the next 18 months is going to have a bearing on the US dollar itself. And also with the interest rates keeping so low, and also the Fed supporting the economy, it's just going to encourage more risk taking within the stock markets and equities. So, watch what happens in the coming months. Also, just to add on that, they find that the virus poses considerable risks, and Fed Chairman Powell commented today that they're not even thinking about raising rates. The May jobs report was good, but as I said last week, the BLS did understate the unemployment rate and the employment numbers, so it'll be interesting to see what June's unemployment numbers will be in July. And he did say that the second half recovery is supported by zero interest rates, but the full recovery is unlikely to occur until people feel safe. We're seeing at the moment 22 to 24 million people out of work. So they're going to continue buying bonds and keep interest rates as low as possible until people are out of, people back into work, not out of work, but people are back into work. So what caused, it was a massive sell-off. It was a 5% down day on Thursday, but there was some worrisome news that several large US states are now seeing a new rise in coronavirus cases, with Texas reporting its highest daily caseload ever. Florida, Texas and California have been trending higher, suggesting that the states could see more than 50,000 fresh infections within a month. So this weekend's numbers will be quite interesting to see how it would bear on the markets come Monday. If these projections are correct in Florida, Texas, California, and cases are trending higher, then this is going to be a big impact on the economy as a whole. So I think the markets are truly underpricing the risk. That could happen in the next few weeks. So we could see much more sell-offs in the markets across the board. So we're going to watch this space and see what happens. Let's look into next what the markets did. So this was last week's market. You can see it was green everywhere. What a time to be in equities and stocks, right? Okay, you see everything was green. You couldn't go wrong buying stocks. What happened this week? It's red. It's S&P, nearly 5% down. Dow at 5.6. The Nasdaq at 1.6, which was the lowest. So couldn't have been that bad if you're still in the NQ. The composite at 6.1 and Russell again 7.9. It literally erased last week's gains. VIX obviously, it rose with the known as the fear index, and obviously volatility risen quite rapidly on Wednesday night, Thursday morning, and everyone followed suit. The FTSE, the DAX, CAC 40, Nikkei, Hang Seng, and the SSE composite index as well. We all had red weeks. So it'll be interesting to see what's going to happen next week. So what's the currency markets doing? So we've got dollar index, slightly up at 0.15. It was a mixed bag. I think the biggest loser was the yen. Obviously, yen strength was the one. Obviously, it's risk due to risk in the equities. So if the equities start to fall, then we're going to see yen strength. And the place to be in was yen. It was to be in selling the euro yen, the pound yen, the dollar yen. Was probably the best trades to be in. Dollar was only good in versus the CAD. We've seen 1.18% rise in CAD. Bitcoin, had a 2% drop, but Ethereum and Ripple, Ethereum not so much, but Ripple's had about 4% drop over the week. So what's coming up in the next week? What's the upcoming week calendar looking like? So we're going to kick off Sunday night, Monday morning with industrial production in China. We've got RBA, we've got retail sales in the US. We've got CPI data in Eurozone and UK, building permits and CPI in Canada. GDP as well, big numbers out on Kiwi, on New Zealand. That will be quite late, about 11:45 GMT on Wednesday. And Thursday we're going to be kicking off with the big one, which is the BOE interest rate decision. It'll be interesting to see what they do and what the actions will be following the GDP data. Got initial jobless claims, also Philadelphia Fed Manufacturing Index. Coming to Friday morning, we've got Aussie retail sales, pound and UK retail sales, and also Canadian retail sales later on in the afternoon. So let's jump in the chart, see what opportunities are out there, and just go through a recap of some trades and also some ideas for next week. So let's look at this chart here. This is the DIX chart. This is from Squeeze Metrics. So it's interesting to see every time we see DIX rising, then we see at least a little pullback in equity markets. If you could come all the way into the last couple of weeks, we see DIX really at its highs, and that was probably a warning sign to see that equities were near its peak and we were due a pullback. We're now at the point where it's pretty choppy. Markets could just turn back up next week, but if DIX goes all the way, down to this area, around here, then we can see markets going much higher. Now, if DIX starts to rise again, we can see equities fallen off. But it's just an observation. It's not exactly a trading tool that you should like trade off, but it's added confluence and information you should have to disposal. So let's look at the charts. So where did we end? Let's look at the 1 week, right? So you can see here we got, this is a bullish a bearish engulfing candle on the weekly. So this actually looks, at the moment it's bearish. It's given us a bearish undertone of what the market's going to happen next week. So I mean, we're still bullish. I mean, let's not get carried away here. We're not, until we, like I said, we break the 2770 level. We can't. I don't suggest we see any further lows. If anything, even if it pulls back to 2770, we could still go higher. Okay, so it's important to know. Obviously, yeah, this is an important candle, of course. But as we've seen how the markets are, we've seen on the daily time level where we've had bearish engulfing, and then the week later we have a bullish engulfing candle, and this means nothing. Okay, so let's look into the days. Okay, so here I looked at potential resistance at the 32.21 level. I actually said on my Twitter about this level. If it closes above, then we're looking at 32.83 and then 3400. But for the past couple of days, Monday, Tuesday, it couldn't close above, and essentially we got the sell-off on Wednesday and Thursday, and even today, just flat basically. It was could be profit taken, or if not, we don't know yet. So but all in all, the market's bullish, right? Okay, so we can looking at some pullback down to here, possibly higher. Okay, so I'll be looking at the 28.97 area, okay, for longs. But as it stands now, no man's land, play level to level. Okay, so let's go into the 5-minute chart, see what actually happened and why I had these levels. So we got our range levels from 30.91 down to 30.27. Now I did say if we broke below 30.27, then we're looking at these areas here, 30.10, 29.94. Okay, so after a couple of attempts, we had 17 ticks scalp, and right back up, came back down again, and it gave another sell-off down to the 29.94 level, and ever since then it's just been ranging. It's a bit of a nothing day really, but there were some scalps there. There was some money to be had. I didn't partake in this trade here, but I was in this one here. So what's next? Okay, well, this congestion here is not telling us anything. Ideally, if you're looking for sales, then back to 31.91, ideally back to 31.56, okay, would be a good selling opportunity, right? Now you can just do a simple retracement down to this low from the high, and yeah, so 31.05 to the 31.66 level. If you get some bearish price action, then yeah, by all means, that could be a good short. So we're looking something like, let's say around here, and then just a bit of a bearish, say he just wants to break down, that will be your short. Stop here and then play it down to the level at 31.91, again same, and then back down to 30.27, and it's pretty much the same really, and just play level to level. It's the best way to navigate these markets. It's nice to get the 100 pointers, of course it is, but it's not always going to happen. Just take what you can. I mean, even today with you had 2 scalps, even at 17 points, that's 34 points, and if you are lucky enough to get the other scalp here down to 29.94, that was another 30 points. So that would have been nearly a 50 point day. So it's still good. There are opportunities to be had. So nothing really to say on the S&P yet. I mean, I'm just looking at levels now, and just get rid of that. Okay, I'm just looking at levels now, really. Again, I'm bearish below 30.28, looking at 28.97. Above 30.91, 30.92, I'm looking at these areas up to 31.56. Okay, and level to level, and I'll be posting that on the private Twitter stream also. Let's look at Nasdaq. So Nasdaq, look, we obviously gone to all-time highs. People are going to say, is this the blow off top? Who knows? Only time will tell. But this is still bullish, right? There's nothing bearish about this market. You know, it's just had a simple pullback. Okay, so even if you go down to this chart here, let's go down to a daily. You know, we still got levels to look at. I've been looking at the 95.13 level, and we hit it to the tick right here, and then bounced off. So these were levels we were looking at on the Nasdaq. Lower levels here at 94.12 and then 93.54. Still bullish until otherwise. You know, we need a massive breakdown from this market. I don't think that it doesn't look likely yet, but this is how you trap bulls, right? This is what the market does. You know, I said last week we had this trend channel, the upside, right? Let's get this here, just adjust it a little bit. Yeah, had this trend channel up to the upside, pierced it, and then closed back above. But then, look, we've come back to the trend channel and then bounced off. So, you know, the uptrend is still intact. We could still go higher. If not, then we're going to go back lower, you know. So, just watching, basically, what this market does. I mean, the Dow itself, let's look at Dow. Dow had a pretty rough week. Right, okay, you can see here coincidence from the all-time highs, right? Here's 79%, come back down. You know, we're still at this resistance here, right? Look at that. Resistance, 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 turn support, up, down. Resistance, sold off, back down again, back into resistance, pierced above it, couldn't come back, and we're back down again. So yeah, next stage was this area here, but I don't see if we pierce this level around the 24.825 would be good longs if it keeps this as support and then goes back up. If not, then, you know, we could be looking at a deeper retracement back down to 22.75, sorry, 22.735 level before we come back up. So just navigate the markets level to level. I mean, I'm looking right now, what would I do here? Right, okay, if we open above 26.170, then I'll initiate longs for 27.337, okay, but you know, we got a long way to go then. You know, if we're below the 25,000 region, then look at shorts, and you know, look at targets around 24,659. So, you know, a couple of 100 points, you know. Again, I'll put that out in the stream. When it comes to equities, you know, just be patient, you know, let the setups come to you. VIX, look at VIX. Okay, this is a monthly chart. All these ranges here, and you can see here, this is a pivotal level, that 47.2. Okay, you can see how it's acting, and this is actually the 50% of the whole range, and you can see how it's been resistance all the way, right? Every time it's come in, it's come back down, right? Okay, so can we go back into this region again? Of course. And if we do, then we're looking at longs above 47, maybe to test the 65 region, and that would obviously be a risk off for the equity markets. So keep an eye on VIX. Anything below 28, then we could be going much higher in the equity markets, but keep an eye on VIX. It's interesting. So let's go to currencies. Let's see what the dollar has done. Right? Okay, dollar for me is probably breaking trend to the bearish level now. Okay, which is interesting, right? So we're below the April quarterly low, right? We smashed through that. Okay, this is pre-COVID levels, and we've chased pretty much all of it now. Okay, so what's eyeing now, what the next level is, will be the 92.63. You take that 2005 high out, and dollar can go all the way down to 88.23, right? So what do I think is going to happen to the dollar? Right, I think we could come up to test the April quarterly low, okay, and that will probably give a little sell-off to the dollars currencies, and then probably come back down. Okay, so I'll be looking at that initially. That's my bias. However, if we are above the 2019 high, then we can easily test the 2020 highs. So these are levels on the dollar index to look for. Why? Because you can see here, right? This was major support and resistance before the market broke down, which is why I'm looking at a retest and down. So we could see the euro dollar, pound dollar pull back, which we have seen in the past day or two. And that's probably just giving it a bit of a relief rally for the dollar before it comes back down again. Okay. But if it has much more impetus to go back up, then obviously I need to see above 99.67 before I can think about being bullish dollars again. Let's look at Aussie. Aussie is interesting. This here is the 2020 yearly high, but also it's again major support and resistance. This is where the high was, and before you can see here on the 2nd of January this year, this first black candle before we had this COVID-19 sell-off. Obviously equities have been quite strong, and we've rallied back up. Also, you know, you can overlay copper with this, and let's overlay copper. Okay, let's see. Let's go to okay. Let's go down to an 8-hour chart. And you can see, look at copper. Every time copper is so correlated with the Australian dollar, it's good to look at what's happening. So look, this red line is copper, and obviously this is Australian dollar. So yeah, copper gave a bit of an indication of when it bottomed out and what would happen to Aussie dollar as well. Okay, so let's get rid of that. So what's next? Well, ideally I would like to see this, right? The 66.87 area before we go back up again. And then we want to be breaking the 2020 highs and then go further up. If we break below 66.83, then, you know, we have the 65, 60s, okay? And then again here at 64.41s, right? I mean, there's more resistance and support zones. But yeah, I'm looking this level here. Obviously you can see here support, turn to resistance, again resistance, and then this candle broke out. I think we're just simply getting a retest and then back up again. So I'm looking at the 66.83 level to initiate longs, Okay, obviously price action is key. Okay, so anything around that area would be good for longs. Yeah, keep an eye on this area. You know, I'd say this band here. I know it's very vague, but this is an area just to keep an eye on for longs. Okay, ideally 66.80s you want to hit that hit and then go long again. Okay, we could even go into 68.97s again before we come back down, but it will still be a good trade for next week. We already retested this low here. That would have been a good trade as well. You know, another about 50-60 pips trade on that. So that's Australian dollar. Look at euro dollar. Euro dollar. Okay, you can see the perfect hit on this resistance line here, this black one here. You can see, look, we literally hit it to the tick, right, before bouncing off. So there was a reaction there. That's telling you obviously there's buyers here. Significant resistance and support area, as you can see. Okay, so let's go on a weekly. You can see on a weekly, look how pivotal it is. There's a lot of business being done here. So anything above or below would give you an indication where the market wants to go to the next level. I still like the March 20 highs as the next level to take out, but if not, then let's look at levels. Let's go to a 4 hours. Okay, you can see here. Okay, we rallied back into this support here. Sorry, this resistance. Ideally, anything into 130.54s and then 113.85s would be a good day trade. Okay, be mindful of this area here at 112.80s. Okay, I'll show you now. Look at that area right here. I'll draw a box as it goes. This area here. Okay, so the market could easily rally into the 112.82s, 112.80s, and then fail, come back down. You can see some significant resistance here. Okay, that's when the market pulled back in, current prices started to slow down. Okay, pierced it and come back up, right? Same here, came back into the same support area, come back up before piercing down. So we can still see strength in the euro dollar so far. I mean, there's nothing to just suggest right now on the short-term basis that this is bearish. I would probably get bearish under the 110 level. But other than that, I'll say this is buy on dips really. And next target would be the 113.54s to 114.26s for next week. If we close below 112.12, then look for shorts targeting 111.38, 110.67s, and then 110.75s. So that's my map coming into Monday. Again, because you got to let Monday unfold, or you got to let price action tell you where price wants to go. We could gap up on Sunday night, or gap down. We don't know. So this is just a map right now telling me what I should be looking for. Okay, dollar yen. So this was a loss for me. I did say last week that I'll go to a daily, that I was expecting this level to hold, and intraday we did. I was looking. I think we were here. I was looking for a pullback into the 107, the 99s to 95s. Okay, because there's significant support and resistance. This red line here. Okay, and then bounce off. We got a bit of an intraday bounce, and then we completely sliced through that. Now I'm still bullish on yen, dollar yen. However, my bias would change if we close below the 105s 95s, where I think that we could then now go much lower, probably go down to the 100 level. But as of now, it's still a range, and I'm not interested in dollar yen until we go above 107, well, 108 area. So anything if we go above here, and then I want to go up. Also, we've got the yearly open at the 108.62 area as well. So two big levels to get through. Otherwise, anything below this low here at 105.95s, then we could be looking lower. But again, remember, this could trap traders right here, right? This area here, we could be trapping traders. So what could happen is we break, okay, everyone's all short now, come back up again, and then we rally. And if that happens, then you know straight away, if we get that break, rounded retest, and everyone's short, but then we close above, once we close above this low, then exit shorts and you want to go long, okay, because I think that will be a very good risk reward long, very tight stop, and then your first target easily at 108s, and then looking at yearly open at 108.60s, and then ultimate target for me is the 112 114 area, to basically this range, these pink boxes here. Okay, pound again. Looking at this area from last week, the 125 level, hit it to the tick, well, not to the tick, but went what, 20 pips, 15, 20 pips below it, and now rallied, had a reaction off it. Overall, it is, look, you know, it's choppy, it's messy, still in a range from the 116 to the 132s. For me to get mega bullish now would be it has to close above the 127.40s. Okay, so it has to come up, right? That's the map, right? If we close below this area, then look at shorts. Check out these lows, okay, at the 121s. That's what you're going to be looking at coming into next week. Also, you know, we've got MPC on Thursday, so be interesting to see what pound does before or after. So yeah, pound has got a lot of potential. Kiwi, nothing. Again, I was looking at this area here for a long, below, then short. CAD. Now, I said to a couple of people that I was looking at this area in CAD. Significance, support and resistance area. Come in, pierced in, we've closed the corona gap, and now we've bounced off. This could easily just come here and then come back down. Of course it can. But could this be a reversal? I'm not sure. Let's just get rid of that. Okay, could this be a reversal? Not sure yet. It's still an inside week, so yeah, I'll be looking at 138.67s to see what happens here. If we get bearish price action, then this will be a great short at the 138s, 67s, okay, and then write it down to the 130 level, okay. Even this area here at the 135.80, so we can go here and then down. So I'm looking to sell rallies on USD CAD. Anything above, basically, for me to get a bit bullish again would be, yeah, it has to be this high here at 140, 141. Break that and then we want to be looking at 144s. But as it stands, you know, I want to be selling rallies into 130 on USD CAD. Okay, Bitcoin. Bitcoin. Okay. Okay, Bitcoin's basically in a range, isn't it? It's not doing anything. It's definitely setting up for something. I mean, this is not just the same coming in and higher lows, right? We could have that again and then just rock it up, right? Obviously first target is going to be the 20,000, sorry, just get rid of that, the 20,000 level, right? Okay, but yeah, Bitcoin to me, it needs to close above the 10,500 level. I think everyone's looking at that, right? So for me now, Bitcoin is just in a range, right? But something is happening, right? Ideally, I mean, coming down, trap sellers, so come down to the 3,800 level, trap sellers, right? Closes above, like that, and then that's your long. That would be a great long, right? And then it goes up. I think that would be the greatest play here. As you can see here, everyone's looking at this level, right, on Bitcoin. So it's trying its best. So it could just range like this for so long that when it does finally move, people have just got bored, basically. And I think that's what it's going to do. I think it's going to frustrate a lot of people into shorts and longs. Ideally breaking down, ideally I think, you know, going to the point where it's going to trap sellers would be the time to buy. So greatest long would be underneath there. The lows are about 4,000, but looking at this range, 6,500 would probably be a good long, right? Ethereum, again, it's in a downtrend. Yeah, but something is telling me that again, this is coiling up to do something. Can it get lower down to these levels? Yeah, of course it can go down to 17, but something tells me this is going to do, you know, then up again. So Ethereum's looking interesting, but obviously Bitcoin is what everyone's looking at, and I think that Bitcoin will still start to frustrate still, you know. If we do get a sell-off down here, you know, that might be a great buying opportunity. The lower it is, the better. But I do think that Bitcoin has more potential to go up in the next 6 to 12 months, definitely. EURUSD, I put a chart out this today earlier, and I said about EURUSD that EURUSD looked like it was going to have a, you know, was a good long opportunity. Sorry, lost for words there. Okay, so you can see here, still in a downtrend. Okay, so the trend hasn't changed, right? You know, still in a downtrend, right? So this could just be lower high, lower lows, lower high, lower lows, lower high, lower lows, lower high, lower lows, lower high, lower lows. Again, lower highs, and then lower lows, right? I'm bearish below the 159 level, okay? This was just a good opportunity for a scalp for the last couple of days, and in the beginning of the week it worked out for us because we had significant support here, and it worked out. But yeah, I mean, if risk on equities are still still off, sorry, so if we still got equities are on sell-off mode, we could still probably see the Aussie weaken, and we can see all the cross assets between Australian dollar go up. So yeah, watch how that looks. Kiwi again, again, I think I touched base on it. I'm not interested yet until we hit these levels at 63.70. So yeah, that seems to be it. I mean, anything else I will update my charts over at the private stream. So if you want to join me, just come on www.longtobear.com. Okay, we've got talking markets here, and yeah, you can see what we cover. We cover you know, the FX, S&P, Nasdaq, Dow Industrial, and the DAX, FTSE, and then we've got you know, oil and Bitcoin as well. So